Imagine having a trading assistant that's not only as smart as ChatGPT, but tailored exclusively to LuxAlgo's premium toolkits. What if you could ask it complex questions like, what additional indicators or strategies should I pair with confirmation signals to maximize accuracy and minimize false entries, and get an in-depth, back-tested answer instantly? Well, with LuxAlgo's brand new AI feature, you can. But how does this AI advice translate into real-world trading? That's exactly what we'll explore today, breaking down how to combine confirmation signals with powerful tools for more precise entries and exits. Before we dive deeper, LuxAlgo is running their biggest Black Friday sale ever. You can get up to 65% off their Ultimate plan, but only Ultimate Plan members get exclusive access to their brand new AI product, a tool so genius no other provider in the market comes close to offering anything like that. You can upgrade or extend your Ultimate plan up to 3 times. With the sale, the new price is less than $1.40 per day. That's less than the cost of your daily coffee, but it gives you the power to revolutionize your trading. Seriously, this is probably a once-in-a-lifetime chance, so you need to make sure to act now before the sale ends, and use my special link to secure this incredible opportunity. As usual, I would like to point out that the strategy we're going to use can be used for trading highly volatile cryptocurrencies, stocks, futures, and forex pairs. The most suitable time frames for this strategy are 5 and 15 minutes, 1 hour, and 4 hours. By the way, I've put this strategy to the test 100 times on Dogecoin. By the end of this video, I'm going to share the full breakdown of my trading results. Okay, without wasting any time, let's get straight into it. To apply the indicators on your chart, log into your TradingView account and open any market. Open the indicators and first search for LuxAlgo Signals and Overlays and click to add it to your chart. Alright, now let's adjust the settings of our indicator. For the signal mode, we want to use confirmation and exits. Next, we're going to enable the ML signal classifier, and then we want to set the candle coloring to none, and then we want to disable the smart trail overlay. And now for the signal sensitivity. Depending on the asset and time frame you're trading, I recommend using the autopilot sensitivity set to midterm or long-term if you prefer an easier approach without adjusting the sensitivity manually. For advanced traders, I suggest using the manual sensitivity and setting it to a value between 18 and 32, based on the asset, time frame, and current market volatility. And here, within the advanced settings, we want to select 1 and 4 for the ML classifier, and finally you want to click the Style tab and disable both the bullish and bearish exit signals as we don't need them for our strategy. Before we apply the second indicator to our chart, let's first understand these signals. Confirmation signals are based on a performance-adaptive trend following methodology. As the name suggests, they aim to confirm any potential action a trader might take and are more effective when used in confluence with other features. For a deeper understanding of signals, we've enabled the classifier in the settings. This adds a strength rating from 1 to 4 directly to the signal labels. For our strategy, we focus only on signals with a rating of 1 and 4 because they offer the clearest opportunities when combined with the second indicator we'll cover in the next minute. A rating of 1 often signals a potential reversal or retracement, while a rating of 4 indicates strong trend continuation. This approach eliminates ambiguity and allows us to concentrate on high-probability setups. Now, let's add another indicator to our chart. Click on Indicators, search for Liquidity Swings, and select it. We'll keep the settings as they are. Let me explain how this indicator works and what we're seeing on the chart. The Liquidity Swings indicator by LuxAlgo highlights key swing areas on the chart where there's been a lot of trading activity. These zones often act as support or resistance, giving us clues about where price might react in the future. First, here we can see the swing areas. These are shaded zones that show where the price has revisited multiple times. They highlight areas of interest for traders. Next, notice the volume labels within these zones. These labels display the trading volume that has accumulated. Higher volume means the zone is stronger and more significant. Finally, when a swing high or low is broken, the indicator adds a dashed line. This signals a potential bullish or bearish move. This tool is great for identifying important price levels and spotting zones where accumulation or distribution might have occurred. While it's not designed for real-time signals, it helps us understand where the market is likely to react based on past activity. And now that we understand the indicators we'll be using for our strategy, let's go over the rules for entering a trade. First, we'll start with the rules for entering and exiting a buy trade. For the first condition, we need to see a buy signal appear. This can be a signal with either a 1 or a 4 in it. At the time the buy signal appears, we also need to see a bullish liquidity swing zone below the current price action. The most important rule is that the candlestick must either touch this zone when the buy signal appears or have touched it within the past 3 candlesticks. Here, all the conditions are met at this candlestick, so we open a buy trade at the close of the candlestick. For the stop loss, we use the liquidity zone and place it slightly below. Now, for taking profits, we will use 3 targets. First, we aim for a 1-to-1 risk-reward ratio. At this candlestick, our first target is hit. At this point, I like to close half of the position and move the stop loss slightly above the entry to protect my capital. For the second take profit target, we let the remaining position run until it hits a 1-to-2 risk-reward ratio. Once the price reaches the second target, we close half of the remaining position and move the stop loss below the most recent swing low. Finally, we aim for a 1-to-3 risk-reward ratio. And just like that, we've completed a profitable trade with a 10% move, a 1-to-3 risk-reward ratio, and very low risk. Now let me show you another buy trade example. We're again looking for a buy signal to appear. Remember, the signal must either have a 1 or a 4 in it. At the same time, there should be a bullish liquidity swing zone below the current price action. It's crucial that the candlestick either touches this zone when the buy signal appears or has touched it within the last 3 candles. Let me show you how this works in this example. Here, this candlestick touched the zone. The next candlestick is the second one. And here at the third candlestick, the buy signal appeared. Because the signal falls within the 3 candlestick rule, it's valid. In this case, all the criteria are fulfilled with this candlestick. So we enter a buy trade as soon as the candle closes. We'll set our stop loss just below the liquidity zone for protection. For taking profits, we follow the same 3-step approach. The first target is a 1-to-1 risk-reward ratio. Once this level is reached, we close half of the position and move the stop loss slightly above the entry to secure the trade. For the second target, we wait until the price reaches a 1-to-2 risk-reward ratio. At this point, we close half of the remaining position, and typically, we'd adjust the stop loss below the most recent swing low. However, in this case, there isn't a new swing low except for the one below our current stop loss. So instead, we use this candlestick right here and place the stop loss slightly below it. Finally, we aim for a 1-to-3 risk-reward ratio for the last portion of the trade. As you can see, this trade also ends successfully, achieving a strong 10% move with minimal risk and a 1-to-3 risk-reward outcome. Okay, now let's learn the rules for a sell trade. For the first condition, we need to see a sell signal appear. At the time the sell signal appears, we also need to see a bearish liquidity swing zone above the current price action. The most important rule is that the candlestick must either touch this zone when the sell signal appears or have touched it within the past 3 candlesticks. Here, all the conditions are met at this candlestick, so we open a sell trade at the close of the candlestick. For the stop loss, we usually use the liquidity zone and place it slightly above. However, in this case, there was a fake breakout above the liquidity zone. To avoid getting stopped out prematurely, it's better to use the current swing high instead and set the stop loss slightly above it. Now, just like with buy trades, we'll use 3 targets for taking profits. First, we aim for a 1-to-1 risk-reward ratio. At this candlestick, our first target is hit. At this point, it's crucial to take partial profits and move the stop loss slightly below the entry to protect the risked money. For the second take profit target, we aim for a 1-to-2 risk-reward ratio. In this case, the price reversed and hit our stop loss before reaching the second target. So this trade resulted in a solid 1-to-1 risk reward with a 3% move. This shows how quickly price can reverse against us, which is why it's so important to use multiple take profit targets. Securing profits step by step helps protect our gains and minimize risk even if the trade doesn't reach its full potential. Alright, at the beginning of the video, I promised to show you the backtesting results. And now it's time to deliver on that promise. I've tested this strategy 100 times manually on the Doge 15 minutes chart, and here are the results. I started with a $1,000 account balance. I use 10% of my account per trade, adjusting as my balance changes with each win or loss. For example, if I profit $100 on a trade, my new balance becomes $1,100, and I use 10% of this updated balance for the next trade. If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.